All right. And for those of you who are joining in live today, make sure that you found your Q&A box in your chat box because as we go through today's presentation, make sure that if you've got a question about anything multifamily, anything about passiveinvesting.com, go ahead and drop it in the Q&A box. That's easy for me to keep track of. If you don't know how to work the Q&A box, chat box is fine. We'll take care of that. But yeah, what we'll do, the format of today's show is we'll go through the content of today's show. And then for those of you, we'll reward you if you're here live. And we'll kind of host a little after party. And then we'll just kind of do a little Ask Me Anything type session. So again, my name is Whitney Elkins-Hutten. I'm the Director of Investor Education here at passiveinvesting.com. And you guys have joined the Passive Investing Made Simple Masterclass. And like I said, this is a live show we do weekly where we deep dive into various topics around passive investing, passive real estate. So you can take this knowledge and put it into action going into your first or next investment with us here at passiveinvesting.com. With that, just to kick off today's show, I want to bring in a special guest, our Director of Acquisitions, Eric Fitzgerald. Eric, thanks so much for being here with us today.
Thank you, Whitney, for having me. Appreciate it.
Yeah. So, we've done these market reports about one a month. So we've covered a lot of the Southeast United States. And today we're going to be talking about Raleigh-Durham. And in that, I know we've done a few of these, but I really want to make sure that we kind of recap some of the information that we've already covered. So would you, for starters, kick us off and just give us a little bit of information about who you are, what your role is here at passiveinvesting.com?
Sure. Yeah. So my name is Eric Fitzgerald. Hello, everybody. Thanks for joining. I live here in Charlotte, so not too far from Raleigh-Durham. Mainly what I do is kind of broker relations. I oversee our multifamily acquisitions platform. So every, multifamily deal, car wash deal, hotel deal that we bring out, myself and my team are heavily involved in that process. So that's a lot of kind of underwriting review, broker relations, going out and actually touring deals, seeing markets. So that's kind of a little bit about what I do.
Awesome. Awesome. Well, let's dive in to the actual market. Now, again, before we get too deep in the specifics of Raleigh-Durham, can you give us like a 30,000-foot view of like different economic factors and demographics that we need to consider when we're selecting a multifamily market?
Yeah. So a lot of the things we look at are your general kind of population growth, job growth, median income. So when we're looking at a deal, we like to see the median income be over 3 times the monthly rent. So the monthly median income be 3 times the monthly rent. So we want to make sure that with, especially now how rents have kind of exploded over the last year and a half, we want to make sure that the tenants and the residents and the people living in that area are actually able to afford the rents that are budgeted and that are already kind of at the property. I would say that's definitely important in the Class C space. Obviously important in Class B and Class A as well, but the affordability issue is more pertinent in the Class C space right now. So those are some of the things we look at. We like to actually get, our feet on the ground in the markets, like I said. So, for example, Nashville was a market that we had identified at the beginning, or actually at the end of last year, at kind of our annual wrap up acquisitions meeting was, all the metrics were there as far as population growth, job growth, incomes, big corporations kind of moving to town. We saw Nashville as an opportunity for us. The next step after that was to actually go to Nashville. We didn't just spend all day on Broadway. We actually went and saw some properties and did some due diligence. But that's a really important step, is kind of getting your team on the ground, getting your boots on the ground. We met with brokers all day and kind of, one of them was nice enough to drive us around the market and show us all the areas. So nothing can replace that. Obviously, there's important metrics that you want to look at first, but that next step is actually getting boots on the ground and going and seeing these places as well.
Awesome. So, you mentioned the affordability piece, and we tend to specialize in the, B plus Class A asset. Why is that?
Yeah, so especially now, the renter incomes of the Class A and Class B space, I'd say Class A especially, are much higher. So the average income of a renter of a Class A apartment is around $75,000 now. And so they're just able to afford a much higher rent. They're able to afford more organic rent growth. You have a lot less bad debt. Throughout COVID, our portfolio performed extremely well with the Class A stuff. And I think we expect that kind of moving forward now in the Class C space. There is money to be made in every, asset class in every space. We just found that from an affordability standpoint, you're a lot closer with the rents and the incomes of a Class C resident versus a Class A, is kind of what we found.
Okay. So I'm kind of putting you on a spot because there's been a lot of grumblings about the reporting of a recession if we aren't already in it. And so how does this space, and I think you've already kind of given us the clue, but just to put a pretty little bow on it, how does like the Class A multifamily really help kind of address these concerns?
Yeah, I mean, so when you look at what happened, for example, in COVID, which was a downturn for a couple weeks, I would say, or a couple months, the residents in Class C space, you saw bad debt happen on 1970s, 1960s deals, even 1980s deals. The resident base that you have in Class A also are typically going to be your home buyers. So while interest rates going up affects everybody, it especially impacts people that are going and looking at buying a first home. Now that interest rates have risen, it's not as affordable for somebody to go out and buy a home. So we find that the people that would be buying homes are now coming in and renting Class A apartments. So it's a good kind of double whammy there as far as affordable, and you're also getting the first time home buyer group coming in as interest rates are going up.
Okay. Well, let's dive into Raleigh-Durham, the Metropolitan Service Area, or MSA as we call it. It's such a huge draw for us. And why is that?
Yeah, so I'm actually going to share my screen. I have a couple reports here I can pull up. So I'm a little bit biased because I live in Charlotte. So I like Raleigh-Durham a lot. My girlfriend goes to law school there, so big fans of everything going on in that market. Can you see my screen here, Whitney?
Yes, we can see it.
Perfect. So, like we said, the job growth and the population growth are two of the main kind of impacts that you're going to see. The supply and demand imbalance of Raleigh is really astounding. So if we look up here on the top right, the vacancy rate right now is around 3%, and projected for this year, it's going to be around 3%. So you can see while the supply has risen, that net absorption rate, which is how many apartments are actually being taken in by renters and rented after they are built or delivered, has been increasing with the completion. So there is no gap here between completions and net absorption. You actually see in 2021, completions are about here, which is 4,000 units, and the net absorption is around 7,000 units. So last year there was a 3,000 unit discrepancy between supply and demand. So that's incredible and super strong. And what that does is brings us down to here with the rent trends up, where we see the 20% rent growth here in 2021. And now you're like, man, that really goes down. But then you see this is actually at about 4 or 5%, which we don't actually even underwrite for in most cases. So we're still seeing extremely strong organic rent growth here in this market. There's still a supply and demand imbalance. There's still a ton of jobs coming to this area. Right here, actually, employers will add 28,000 jobs in total, with many being high income tech and cloud computing opportunities. There's a big news story about Apple coming in with the average wage there was like 180,000 of the jobs that were going in. So everybody kind of knows Raleigh-Durham. These are just a little bit more of the data points to kind of back that up from this report.
So one quick question on the vacancy, especially whenever it comes to like underwriting, what kind of vacancy, how are we pegging the vacancy in the pro forma? Like, are we being conservative, right with market? How are we doing that?
Yeah, so we'll typically look at data like this, which is an overall market, and then we'll dive down into the sub-market vacancy rate, because that can obviously change as maybe there's a lot more supply in this specific part of town, and maybe the jobs haven't quite caught up to that area yet. So it's important to look at the submarket. I can't say we are never better than what the data shows us. We're typically at about 5%, sometimes 6 to 8% if we see something happening in that market, but we typically aren't looking in those markets anyway. So we're typically around 5%. Even if this says 3% here, we'll typically underwrite for 5% just as a little bit of a buffer for us.
Yeah, a little bit of a conservative hedge there.
Mm-hmm.
So talk to us about, I mean, one of the things that I know that I love and I talk to investors about is the actual, ecosystem in the state. How does North Carolina stack up as far as like taxes and the legal side of things?
Yeah, so that's kind of the big story. There's a good book called Big Shifts Ahead that pretty much called this whole Southeast migration pattern. So basically, it's a business friendly environment with low property taxes, low personal taxes. So we see a lot of the migration coming from obviously New York, Ohio. I'm from Pennsylvania. Chris on our team is from New York. So we have a lot of kind of Northerners coming down. Actually, now that I think of it, Ryan on our team is from Wisconsin. So you start thinking, even in your own circle of influence, how many people are moving down from the north into these southeastern states with business-friendly environment, good weather. There's all these kind of economic factors and just demand factors coming for the Southeast U.S. And the rents and the supply have not caught up to that demand. How many people are moving in? I think Charlotte is like 100 people a day. Nashville is like 80 people a day. So there is no way to kind of keep up with that demand right now, and that's why we found the Southeast U.S., especially in the Carolinas, is a good spot to be at.
Very cool, very cool. So you mentioned the submarket. Like, what submarket areas are we looking at in Raleigh-Durham?
Yeah, I can actually pull up a map here. So we bought a deal in a town called Cary. Oh, way far out. We could look at another country if you want. So we bought a deal in a town called Cary. I guess I should say a city called Cary, which is right to the west of proper Raleigh. And we actually sold that deal about 12 months later for a very, very good price based on where we bought it at. And we found the demand is really growing out west into Cary. We're actually looking at another deal in Cary as well right now. But this Cary Apex area is really blowing up. Obviously, you have the connector here to Durham and Raleigh, so that's a really good spot to be in if you believe that those two will eventually merge, which a lot of people do. Wake Forest, obviously, the university. Not a whole lot of interest or development down in this area, but anything in this kind of circle, excluding some parts of Raleigh, is going to be a good bet, especially Cary out west here, which, like I said, we had a deal there. And looking at some other deals in that market as well.
When you talk about like the demographics being a huge driver, how are those stacking up against our demographic metrics?
Yeah, as far as population growth, job growth, let me actually see. Might have a better kind of some better data here, some hard data. So let's see. So the Raleigh MSA in total, the 2025 projection is 1.6 million people from 2020 of 1.4. So a huge kind of growth story there. This is Wake County, like we talked about, where Wake Forest is. Raleigh, I guess this is the city of Raleigh. So you kind of see where the population in 2020 is versus where it is in 2025. And then you go down to this where the household income, if you see a 1 in front of the household income, it's typically a good bet. Overall, obviously, we'll drill down into the submarkets a little bit further, but just a lot of high paying jobs coming here. And that's, one of the kind of big stories with Raleigh-Durham as a whole right now.
A question came in from one of our listeners. What's your take on Burlington and Greensboro nearby?
So we have looked in there. There isn't quite the story as far as the job growth and the investments in the local kind of demographic, but I have heard some good things come out recently, actually, some larger job announcements. Um, I would say if you're more of a, if you're looking to kind of build a portfolio regionally, I would, probably invest in those markets if I knew them very well. But with our kind of, goals and what we're looking for, we find that places like Raleigh, Charlotte, Charleston are a little bit more comfortable for us in the case of an eventual downturn. We think there's a better kind of job base and population base there to kind of, thrive through that kind of environment. I think you can find a lot of good stories while everything's on the up and up, which is always good and maybe a reason to invest. But when things start coming down, eventually, who knows when, I think those are the kind of places that are going to get hurt the most with how low cap rates are. People are buying, the cap rates that we're buying in Raleigh, people are buying those similar cap rates in places like Burlington, which I'm not as comfortable with. And it's hard to find a broker that will give you some kind of pricing discount based on the market. It's just hard to find with this kind of market. So we're more comfortable in the larger markets.
Got it. Thanks. And it looks like you have some more data around the population to share with us.
Yeah. So this is the Hub Research Triangle Park development. This is right near our Raleigh Cary deal that we had. So the Wake County is moving their bandwidth, is moving their global headquarters to Raleigh, adding over 1,000 jobs. There's 3 tier 1 research universities, which may be broken down here. We can get into that. Number 5 best performing economy in the United States, number 1 city for best real estate prospects in 2021. So everybody loves Raleigh. It just there's a lot of stories there as far as the job growth and the tech, especially in the tech area as well. So this is what they call the Research Triangle region, Raleigh-Durham, and Chapel Hill. So I know you have Duke, you have UNC, and you have Wake Forest. I'm assuming would be the 3rd university there. But obviously everybody knows about the rivalry with Duke and UNC, but just people are graduating from those schools and then they're getting jobs in those areas. So they're just pumping out, well-qualified, high-paid employees inside of those regions. I think that's one of the reasons why the Research Triangle has been so popular within the last decade or so. You see right here between the year 2000 and 2017, there was a 68% increase in population over that 17-year period. And it's projected to be the 2nd fastest growing large city between 2015 and 2030. So here's a couple of things we talked about: attractive business climate, highly educated workforce, established infrastructure, quality of life, robust economy. So definitely a good spot to be. There's plenty of data to kind of support that as well.
All right. It is close to the coast. So how are we, kinda, right?
I guess relatively, yeah. Relatively to maybe Charlotte, yeah.
I was gonna say closer than I am in Boulder, Colorado. Just kidding. Anyways, so how are we mitigating, like, the weather or anything that might impact that area?
Yeah, I mean, we always get insurance estimates before we submit on deals. So, insurance carriers insure thousands of units in Raleigh, and they've got it pretty well down to a science as far as when storms happen and how bad they are. As you move closer to the coast, you're going to get a higher premium on your insurance, obviously, with more risk. Places like Florida, like we've seen on some of our deals, are a little bit higher on insurance. But this year, really, we're not, I think, close enough to the shore where it would be an issue. And even if, a storm came through, we would be properly insured. And I can tell you, we do underwrite for a higher insurance number here than we would for Charlotte, probably based on that reason, just that we're a little bit closer to the coast over here.
All right, another risk involving the property, the tenant. You've talked a lot about it. I mean, Raleigh-Durham has a lot of high quality tenants, growing tenant base. But when we look at a specific property and we're going through the acquisition of it in the due diligence period, what are we doing to take a look at the tenant?
Yeah, so we always do a lease audit. So we'll see a list of every single tenant. If they're a student, they have to have a guarantor. Every place that they work, what their income is, So we're able to drill down and we actually make a report based on that data, kind of like a pie chart of how many people are in this bucket, how many people are in this bucket, and by buckets, I mean industry. So we don't want to be dependent on one industry. So that's a good thing here is you can see right here on Q, has the research triangle features a well-balanced economy. So we have pharmaceutical and biotechnology companies, healthcare, financial services, universities, government. So, you have healthcare, you have government, you have the more exciting stuff as far as universities, the pharma, the bio. Um, so it's a good spot. With definitely something that we look at, especially in markets that are a little bit more dependent. I think one of the things that Raleigh-Durham has going forward is just the diversity of employment already there. So if you're in a submarket, definitely kind of drill down on that submarket and make sure your tenant base isn't all working at the same spot. But you kind of have a good base here in Raleigh.
Very cool. Very cool. Well, is there anything else that you'd like to share with us about the Raleigh-Durham area?
No, this is a little bit more about the, so they were calling NC State as the other university, not Wake Forest. But yeah, definitely, the tier one research university triangle here, this is how they came up with the triangle idea. I just think in the long term, having three universities like this, all within this close proximity, this middle area here is going to be on the up and up as far as jobs and population and high paying employees in the long term. So we definitely believe in it. And yeah, happy to answer any questions as well.
Awesome. Guys, jump on over to the Q&A box, drop in your question. We're going to stay a little bit longer in our after party session and get those questions answered for you. But for those of you who are listening to us on the podcast, thank you so much, Eric, for joining with us and educating us about the Raleigh-Durham area. And be sure to join us next week for registering, be sure to join us next week for our next masterclass session. You can register at passiveinvestingwithwhitney.com. Guys, don't go anywhere. And for those of you who are listening to us on the pod, we will talk to you very soon.